Hey guys, it's Nagpal from Remax Hallmark, and this is your resale market update for the month of April 2020. Hey everyone, hope you're keeping well and safe and practicing your physical distancing. I actually don't like the term social distancing, but it's amazing to see all of us as humans adapt, and especially proud of Ontarians and Canadians who've come together much better than our neighbors, tackle this situation in a much more civilized manner and a peaceful way. So what's happening at the Nagpal group? So we continue to be super busy. I'm having a lot of different conversations with a lot of different folks who have a lot of intent to transact. So I'm talking to sellers, I'm talking to buyers, I'm talking to landlords, and I'm talking to tenants. So there is a lot of activity and there's a lot of intent. So we've had to adapt the way we do business. I think the entire real estate profession had to change very quickly. For instance, we're doing Zoom presentations now. A lot of those I'm hosting, and I'm attending at least 5 to 10 of those a week. We're doing virtual tours. We're doing dollhouse tours. We're doing video walkthroughs. We're doing e-signatures. We're doing exchanging funds electronically. So basically eliminating a lot of the physical contact. So I sent out this email to our top referral sources, asking them what type of questions would you like to get answered in this update. And I got a lot of questions. So I'm going to try to go through them one by one and get those answers for you now. So one of the first questions that was asked was, how are sales taking place right now? Are purchasers buying sight unseen, relying on photos, or are serious buyers visits only being set up? So the answer is a bit of everything. So virtual showings are taking place. So virtual showings in a sense means we can have the seller walk through the house at a particular time, or we could walk the house for you. Virtual tours, dollhouse tours, virtual showings, these are only to kind of figure out who the serious buyers are. I mean, if you're a buyer, you don't need to go out and expose yourself. You could take advantage of the technology that exists today. So a lot of people are interested in what's happening, what's the status of the market. Real estate in general, again, in GTA, began or got into this crisis at a very strong level. So as a result, I think we are quite resilient, and we're seeing some of that when I share the stats with you. We are one of the least ones to get impacted by this for the time being. And I also do believe firmly, once life begins to get normal, whatever normal looks like on the other side, I think real estate is going to be one of the first ones as an industry to have the highest growth curve. So as it stands, the market is frozen. And what I mean by that is the number of sales is down very significantly. And so is the number of listings that are coming on the market. So basically, at the same time, the buyers and the sellers both exited the market. So I've always tried to educate my clients on the 4 pillars of real estate. So let's talk about the first one, interest rates. So interest rates right now are low, and they will continue to be low for the foreseeable future. I don't think the Bank of Canada is in a position to kind of raise the prime rate anytime soon. And I think we're going to be in low interest rate environment for the foreseeable future. The second pillar, consumer confidence. And this is an important one because this kind of embodies the other 3 pillars within it. So consumer confidence right now is low. I mean, people were just shocked at what's happening and the severity and how quickly this happened. Third, employment, or should I say unemployment. We went into this crisis at a 5.5% unemployment level. We are at about 13% right now. The good news is majority of this is temporary layoffs. So I do expect that a lot of those jobs will come back very, very quickly. And a lot of my comments are specific to Ontario economy. So the fourth one, population and immigration. So immigration, of course, right now has been stopped. No one's coming into the country. We don't know when that's going to get open. Of course, it's going to be open slowly. The immigrants were forming a part of the demand on the rental and on the resale side. So we're going to have to see how this plays out. I mean, 2019, we had 540,000 immigrants come to the country, which was amazing. Population growth, of course, is going to continue. Maybe we'll have a COVID-19 baby boom, who knows? So those are the 4 pillars that we have to really watch out for, and they control the market in a significant way. So right now, the only people on the market are the people who need to sell. The other interesting stat that I read at one of the CIBC analyst reports is that only 10 to 15% of the mortgage holders deferred payments. Now, again, that's a pretty low number if you really think about it. That really means 85 to 90% of people chose not to defer their mortgages. So sales activity is down 67% in Toronto, 70% in the York region, 52% only in Durham region, Peel 72%, and Halton 64%. Let's talk about average prices. Toronto is down 2.5%. Surprise, surprise. York region is up 6.1%. Durham is flat. Peel region is up 6.5%. Halton is up 1.8%. So let's talk about months of inventory. This is a great leading indicator. This is, when you talk about the terms of buyer's market and seller's market, this is the metric that you look at to determine that. So right now, it's 3.5 months of inventory in Toronto. And this is, again, one of the questions that I received. Is it a buyer's market or a seller's market? So technically speaking, it is still a seller's market, right? But is it turning into a buyer's market? Is it moving very rapidly towards a buyer market? For sure. I can also tell you that if you're a buyer, this is a great time to get into something because you're not running into multiple offers that often. Durham region still has a lot of multiple offers. There was a condo in Scarborough that attracted over 50 offers last week. Another question that I received is which price point and type is driving the sales? What I've noticed is anything between $600,000 and $1 million, that's where the majority of the transactions are. Condominiums are, again, slightly lower price point than that. So looking forward, we expect, I personally think, by Labor Day, the Ontario economy should be firing by about 40–45%. And by January 2021, to about 70–75%. Mortgage rates will continue to be low. Reduced levels of activity will continue. People are not going to be in a position to sell or buy that comfortably. So people are going to just be very careful in how they proceed with their real estate transaction. And the $1 million questions, is it a buyer's market or is it a seller's market? We'll have to wait and watch to see which way do the months of inventory go. So we don't know where it's going to go right now, but definitely there's been a turn and it's moved very rapidly from a seller's market towards a balanced market. We'll kind of see how it goes from this point onwards. What does that really mean to you? That means that this is a great time to buy. I cannot tell you the level of pent-up demand that we were seeing pre-COVID and even during the crisis. The other interesting thing that you should know, level of activity, dropped, and it was at the lowest around the Easter weekend. And for about 2–3 weeks straight from that point onwards, we've had 20–25% growth in the level of showings and the amount of showings and the amount of offers being registered. That's it for me for now. If you have any specific questions, more than happy to answer those for you. Thanks for watching and have a great day.